If I told you that the biggest institutions out there were hijacking the crypto market to manipulate it to its fullest extent, would you even believe me? You probably wouldn't, because most people right now are just blinded by the bullish nonsense that is being pushed by all of the influencers, all of the maxis, and it needs to be focused on right now. So with that being said, welcome to the channel, everyone. My name is Nick. For those that are new to the channel, hopefully by the end of this video, you do become a subscriber. If we take a quick look at what was just recently published by the Bitwise Chief Investment Officer, he said the most powerful people in finance are allocating to crypto. Now, although yes, technically this is bullish, okay? We're now starting to see crypto taken seriously by the TradFi space, by the biggest players out there. But it's also very scary, especially when we do start to see control being usurped from the space to the big players like Wall Street and the TradFi giants. And I want to remind you guys that the biggest market manipulators out there are not, some wealthy traders. It's not some retail guy. It is the biggest banks that you are made to believe are so, legit. They're playing by the rules. Yeah, they're the biggest market manipulators out there. Your precious JP Morgan, Bank of America, Citi, they all manipulate markets in their favor. They don't care about the losses that you or I take. Now, if we go over here, we have just in the largest US custodian bank, BNY Mellon, to launch Bitcoin ETF custody. Bloomberg, gonna eat Coinbase's lunch. That's literally the words of a maxi Bitcoin news outlet. How comical is this? If we go back 10 years ago, if a Bitcoin maxi said, hey, I want BNY Mellon to custody Bitcoin, everyone would scold them. But now we embrace this with open arms because we want to cling on to anything to pump the price of Bitcoin because it has failed. It has failed as a digital currency that has legitimate utility. The only utility is now people buying it, holding it. When we think about how significant that is to realize, it is very important. Everyone wants to cling to the idea that it's digital gold, that's a store of value. These are things that maxis have made up to justify any sort of utility behind Bitcoin. But now, as we do start to see it being accumulated by the biggest players, and now we also have Hester Peirce, who is an SEC commissioner, spilling the beans on it, saying that they're allowing regulated financial institutions to bypass SEC rules, which will allow them to custody Bitcoin and crypto. This is very concerning. They have now infiltrated crypto in a large way, and they're hijacking this market. Over here, we have SEC Commissioner Hester Peirce says they're allowing particular entities to bypass SEC rule preventing regulated financial institutions from custodying Bitcoin and crypto. Check this out.
Passing my resolution under the CRA to repeal the bulletin with support from Majority Leader Chuck Schumer in the Senate before it was eventually vetoed by the Biden-Harris administration. We are now hearing that the SEC's Office of the Chief Accountant is engaging in conversations with some market participants on a case-by-case confidential basis to inform them if they need to comply with SAB 121. It looks like one firm even received a non-objection from the bulletin. It's incredible how big of a hole the SEC has dug itself into. Yet, despite the backtracking and the rebuke from both houses of Congress, earlier today, Chair Gensler indicated he would not rescind SAB 121 in response to a question from my friend across the aisle, Mr. Wiley Nickel. Chair Gensler, now that the Office of the Chief Accountant is picking and choosing who needs to comply with SAB 121, why wouldn't the SEC simply rescind SAB 121 entirely or issue a new guidance?
Stepping back, this guidance, it's the 121st. It's what we've been doing for 52 years. And it's guidance about what happens in bankruptcy, whose assets are there. And crypto bankruptcy after crypto bankruptcy, the bankruptcy courts have said it's not the investors, it's the bankruptcy estate. That's what that accounting bulletin is about. Is it a liability in bankruptcy, basically? And customers get hurt.
Let me reclaim my time, Mr. Chairman. Commissioner Peirce, what kind of signal does it send when the SEC is carving out individual firms from its own staff accounting guidance on an one-off basis? What would be the approach you'd recommend instead of a response to the problems caused by SOB 121?
The approach I'd recommend is we need to go back to the drawing board. We need to figure out what the right accounting is in this area, and we need to do that involving the public in a process, not just putting out a staff bulletin. And then applying it, Chair Gensler mentioned earlier, it applies to public companies, and that's true. It applies on its face to public companies, but we've also applied it to broker-dealers, and now, as you pointed out, we're peeling it back for particular entities. There was a question earlier about why there's only one custodian in the ETP space, and one of the reasons is because of our SAB 121, which makes it very hard for people to be custodians in this space.
And think about the market concentration. There's been no accounting bulletin from the SEC that has ever been as fundamentally flawed as SOB 121, nor has there ever been one that has been considered a rule according to the GAO, and we certainly haven't seen 60 U.S. senators overturn any of the 120 previous accounting bulletins either. Something's amiss here. This does not look right for the SEC. The situation we're in today is indicative of a failure of your organization to recognize just how problematic SOB 121 has been. Chair Gensler, do you believe that SOB 121 has led to concentration risk because of how few entities are able to offer digital asset custody services?
I think it's actually the right accounting. Off-balance sheet accounting is also what, in part, got us into the 2008 crisis. So just remember, like, when people are trying to hide things and put them off balance sheet, it's not good. Also,
you talk about hiding things, Chairman Gensler. We don't even know what deals you're cutting on SOB 121 when you give a no objection letter to a different firm. Like, if we're going to talk about hiding things, let's talk about transparency. Let's talk about how do people in this country operate under our laws when your commission is doing backroom deals with one-off companies and writing them a no objection letter. That's not transparent. That's not in the interest of the American people. You can't follow rules that you don't know about. What's going on?
The accounting bulletin is, the staff accounting bulletin is out, but also for years, companies come in, public companies, and said, this is how we're going to account for something. Do you object? And in this case, if it's remote from bankruptcy, if a company is going to go bankrupt and it's truly the customer's funds.
I'm going to hold you there because I want to give your colleague a chance. Commissioner Peirce, I'd like to pose the same question to you. It's market concentration. Is that a risk from SOB 121?
It is a risk, and the accounting raises real questions about whether this is protective of investors or not. And so that's why I think we need to go out with a real process to try to figure this out.
At the end of the day, the SEC has to read the room. And the entire House of Representatives voted on this, and a majority of members of the House rebuked SOB 121, and the Senate, led by the opposing party, they passed it with 60 votes, including the majority leader. This is not a good look for the SEC. This should go away. This is bad policy. With that, I yield back.
And the SEC is 100% allowing these entities in. They want them to have control. It's all about control. It's all about power. It's all about manipulation of these markets. They want to give this market to the biggest players because that's what they want to justify. They want the incumbents to win just like they always have. Go back to 2008. The largest financial crisis, the poor got poorer, wiped out, a ton of the middle class, and the 1% and the big banks got richer. In fact, the big banks grew in size. So as we really kind of think about this, it's the same exact story over and over again. It's just like when BlackRock was filing their spot Bitcoin ETF. Remember this. I bring this back up. Gary Gensler literally issued a statement on the Bitcoin ETF approval. His quote here was, "While we approve the listing and trading of certain spot Bitcoin ETP shares today, we did not approve or endorse Bitcoin. It hurt them so bad to actually approve this. But the reason why they had to approve this is because BlackRock was the ones that were really pushing this. Once BlackRock entered into the picture, they had no choice." Again, this is showing us where the focus actually is. The focus isn't on, the players in the space. Companies from this space have tried to meet with the SEC, tried to get any answers. They don't. But when it comes to BlackRock or any TradFi player or any incumbent, they're instantly getting the green light. Just like, for an example, BNY Mellon getting a big approval around Bitcoin custody services. And it even goes back to FTX, right? FTX was welcomed in with open arms, got the green light, and we're still asking the question, why? What happened? But also, I want to share with you guys the fact that BlackRock getting the big green light, all these big TradFi players getting the green light, it goes back to my original viewpoint, which was these big bankers, they are the number one source of manipulation of a lot of these markets, just like gold and silver. The commodities markets are the biggest scam because these big bankers control them. Former JP Morgan precious metals trader sentenced to prison. This was back in 2023. And here we have 2020. JP Morgan Chase & Co. agrees to pay $920 million fine in connection with schemes to defraud precious metals and U.S. Treasury markets. Guys, when we think about crypto and the ETFs are a big gateway to manipulation by these big bankers. And even BlackRock, they're hijacking this space through these ETFs. You want to know the proof? Here we have it, right? This goes back to May 20th. You read it right. BlackRock has been settling its Bitcoin transactions with Coinbase without using Bitcoin settlement network. We're not talking about buying a coffee, but institutional settlements of $18.5 billion fund. The reason, transaction speed and fees. Got it now? And here we have, this arrangement allows BlackRock to borrow Bitcoin, including for short selling without proving a 1-to-1 holding ratio. AKA, this is the gold market, or I should say the paper gold market 2.0. BlackRock's off-chain Bitcoin borrowing raises transparency issues. And yeah, it 100% does. And this goes back to September 8th. We all knew it. BlackRock settles with Coinbase off-chain and is opaque. This was fought for by the SEC by the NCash method, a total scam. Hence the price is not affected even though they're buying all the Bitcoin. Scam of the century, in my opinion. Again, this is the paper gold market 2.0. This is exactly how they're manipulating the general public. While everyone's rushing out trying to buy spot Bitcoin, these players like BlackRock don't even have to prove a 1-to-1 holding ratio. And they could buy in cash. This is absolutely wild to me. This is why I say, when we think about all of this bullish news that these Bitcoin maxis are pushing and all these influencers saying, that's it, $250,000 Bitcoin, $500,000 Bitcoin, wake up. Wake up and open your eyes to what these big players actually are. They're massive frauds. They're the biggest manipulators out there. And it's clear by looking into history around JP Morgan, Bank of America, Citi. These are just two examples, by the way. Just two examples. The gold markets have been heavily manipulated ever since the ETFs. And I even said around the ETFs, this was going to lead us down the same path when it comes to Bitcoin. But everyone was saying, no, it's completely different. Everything's on chain. They have ways of working around that. Got to remember, this is BlackRock. This isn't your typical retail individual getting into, crypto. This is BlackRock that controls half the world. And you got to thank one agency for all of this, and that is the SEC. The SEC is a big player around all of this. They welcomed this in. This is why I say that this space is being hijacked. Control of this market, power of this market is being hijacked by those that, if we go back 10 years ago, for an example, all the crypto, investors, everyone that was pro Bitcoin, they were so against this, yet they didn't even realize where we were headed. If we look at this space from their viewpoint now, they would be disgusted. So with that being said, I hope that you guys enjoyed this video. If you guys definitely leave a like, subscribe, turn notifications on because more free content. You guys are more than welcome to follow me on Twitter and join the free Discord down in the description below. And with that being said, guys, it's been Nick. Thanks for watching. Peace out.